Have you ever found yourself scratching your head at the mention of Bitcoin, Ethereum, or any of the hundreds of cryptocurrencies popping up like mushrooms after the rain? If your answer is yes, then this video is just for you. Today, we're going to demystify the world of cryptocurrency and explore how it could play a role in managing your personal finances. This one's going to be a roller coaster, so buckle up. Imagine for a moment being part of the group of tech pioneers who first heard about Bitcoin in 2009. Back then, it was worth almost nothing. Fast forward to today, one Bitcoin is potentially worth tens of thousands of dollars. Unbelievable, right? But here's what's even more fascinating. Cryptocurrencies like Bitcoin and Ethereum operate on a technology called blockchain, which is a decentralized technology spread across many computers that manage and record transactions. Let's take a quick trip down memory lane to get a bit of context. Bitcoin, the first cryptocurrency, was created in 2009 in the aftermath of a global financial crisis. It was a revolutionary idea, a currency free from governmental control, anonymous, and completely digital. And you know what's even more intriguing? The person or group of people who created Bitcoin, known as Satoshi Nakamoto, is still unknown to this day. Now, why are these cryptos becoming the next big thing, you may ask? The answer is simple. It's like the Wild West of the financial world. Thrilling, full of risks and potential fortunes. They offer us the opportunity to explore a new financial frontier, free from centralized banks and government control. Moreover, cryptocurrencies offer lower transaction fees than traditional online payment mechanisms and may be operated by a decentralized authority, unlike government-issued currencies. By now you're probably thinking, hey, I know Bitcoin, but what are these other cryptocurrencies? Great question. There are about 23,000 cryptocurrencies in existence today. Some of the most popular ones are Ethereum, Tether, and Binance, each with its unique advantages and use cases. All right, let's cut to the chase and answer the question on everyone's mind. How do these cryptocurrencies fit into personal finance management? Just like you wouldn't invest all your money in a single stock, cryptocurrencies can be part of a diversified investment portfolio. Think of them as a spicy ingredient that can add a bit of kick to your financial stew. But remember, too much spice, and you might end up burning your taste buds, or worse, your wallet. The potential for growth is high, but so is the volatility. And here's a kicker. Crypto can be a hedge against inflation because it isn't tied to a central bank. With governments around the world printing money to stimulate economies, some investors turn to crypto as a potential hedge against inflation. Now, who's ready to jump on this digital gold rush? Are you? Well then, let's get you started. It begins with setting up a digital wallet, choosing a reliable trading platform, and understanding the basics of buying and storing cryptocurrencies. Also, it's important to learn how to analyze market trends, understand the significance of blockchain, and educate yourself about different cryptocurrencies before you start investing. You've probably heard the term mining related to cryptocurrencies. It's not about pickaxes and hard hats, but it's just as important. Mining in the crypto world is the process of validating transactions on the blockchain. It requires significant computational power and is rewarded with new coins, making it another way to get involved in the crypto world. Speaking of blockchain, the technology behind cryptocurrencies, it's worth noting that its impact extends far beyond the world of finance. It's a groundbreaking technology that has potential applications in many sectors, from supply chain management to healthcare, from voting systems to the art world in the form of NFTs or non-fungible tokens. Cryptocurrencies are just the tip of the iceberg when it comes to blockchain's potential. And hey, don't be that guy who lost 7,500 Bitcoins by throwing away his hard drive equivalent to a small fortune today. Ouch. That hurts more than stepping on a Lego barefoot, doesn't it? Hold on for a second. Before we venture further, if you're enjoying this video, then hit that like button, and if you haven't yet, subscribe to our channel. And here's a question for you. What's the first thing you'd buy if your cryptocurrency investment hit the jackpot? Let me know in the comments below, and don't forget to check the description box for some useful resources. Let's get back to our crypto journey. So you bought your first Bitcoin or a fraction of it, because let's face it, not all of us have that kind of cash lying around. But before you start dreaming of Lamborghinis and moon trips, let's talk about the pros and cons of using cryptocurrencies in your personal finances. Just like a coin, pun intended, there are two sides to this story. Cryptocurrencies can potentially offer high returns, and they're an exciting way to diversify your portfolio. Cryptos also provide an opportunity to become part of a new and rapidly growing market. But on the flip side, they are extremely volatile, and you might just wake up one morning to find your crypto worth less than your morning coffee. Plus, there are potential security challenges. Hacking and fraud incidents have been reported in the crypto world, so it's critical to be mindful of security. Another critical factor to consider is government regulation. As cryptocurrencies gain popularity, governments and regulatory bodies around the world are grappling with how to manage them. Changes in regulations can have significant impacts on the value and usability of certain cryptocurrencies, adding another layer of complexity and risk. Risk management is crucial when investing in cryptocurrencies. The volatile nature of these digital currencies means that it's entirely possible for the value to plummet, just as it can skyrocket. It's crucial to be prepared for these fluctuations. Only invest money that you can afford to lose, and consider spreading your investments across various cryptocurrencies instead of putting all your eggs in one basket. A smart investor knows that a well-diversified portfolio is a resilient portfolio. Let's dive into some practical tips if you decide to dip your toes in a crypto ocean. Firstly, remember not to invest based on hype and speculation. Research is your best ally here. Understand the technology behind a cryptocurrency before investing. Secondly, consider dollar-cost averaging, where you invest a fixed amount regularly regardless of the price. This strategy can potentially reduce the impact of volatility over the long term. Lastly, and let me emphasize this, never invest more than you can afford to lose. Crypto investing should be an exciting journey, not a stress-inducing roller coaster. We've seen people, both the savvy and the lucky ones, who've managed to amass substantial wealth through cryptocurrencies. They're the ones making headlines and driving up the crypto hype. But let's not forget about those who used their Bitcoin holdings to buy a pizza back when it was worth less than a penny. They're probably kicking themselves now, reminding us that timing in the crypto market, as in any market, is everything. So, what does all this mean? Are cryptocurrencies the future of personal finance or just a modern-day version of tulip mania? Only time will tell. But it's essential to remember that while cryptocurrencies present unique opportunities, they shouldn't be viewed as a get-rich-quick scheme. Sound investing principles like diversification, understanding what you're investing in, and being aware of your risk tolerance always apply. There's no denying that cryptocurrencies are making waves in the global financial landscape. They're influencing how we think about money and how we conduct transactions. Major corporations, financial institutions, and even countries are jumping on the crypto bandwagon. El Salvador, for instance, made headlines by adopting Bitcoin as a legal tender. The future of cryptocurrency is a hotly debated topic among experts. Some argue that as more businesses, institutions, and governments adopt cryptocurrencies, we'll see them become a standard part of our financial lives. There's a world where we might be paying for our groceries with Bitcoin or receiving our salaries in Ethereum. And it's not just the big players. Cryptocurrencies have the potential to transform economies in developing countries by providing access to financial services to people who are currently unbanked. Hey, if you made it this far, you're officially what I call a crypto crusader, bravely exploring the uncharted waters of digital currencies and poised to conquer the crypto realm. And before we wrap up, I want to drop a quick reminder. If you've enjoyed this crypto journey, there are plenty more exciting adventures on this channel. So why not check out another video? After all, financial wisdom is the gift that keeps on giving. And remember, whether you're soaring to the moon with Bitcoin or diving deep with altcoins, you're not alone. We're all in this exciting crypto journey together, navigating the ebbs and flows. As we keep exploring the financial universe together, let me know in the comments what topic you would like us to venture into next. Thank you for watching, and we will see you in the next video.